Good morning. It's Tuesday, April 8th. Thanks for joining me. It's going to be another busy session here. I'm Philip Streible, Chief Market Strategist at Blue Line Futures. So the question is the washout complete? The dip buyers, they are emerging. And the question is whether this is just a relief rally or a bottom in many of these different markets. So yesterday, wild trading session here. We had some rumors that sent the Dow on about a 2,500 point swing. So let's take a quick look at the equity markets here with the S&P 500 up about 1.5%, the Dow up 2%, the Russell up 2%, and the NASDAQ up about 1.3%. We do have gold up about $50 at 30.26, and you have silver up 59 cents at 30.19. So some big moves in these markets overnight. So one of the stories that I was following, and this really rattled the markets in the early evening last night, Donald Trump threatened to impose an additional 50% tariffs on China, really ratcheting up those tensions here between the two largest economies. And China's response was the U.S. threat to escalate tariffs on China is a big mistake here. They said China will never accept it. And they said that China will fight to the end. So we saw a decline on the equities real briefly, but it was brought in and it was supported back up. Now, why? Because China is doing some things internally. They're taking measures to reassure investors. They're kind of loosening the grip on the yuan. And then what that does is it helps boost their exports. They also promise to make loans and also stabilize their markets here. So it's a sign of determination that they really want to support and shield their economy. Now, if you look at gold fell about 2% here yesterday, down to about 29.71. Third straight day of declines. It fell about 5% over that period of time, and it's its worst drop since 2021. Now, overnight, gold has climbed back up over that 3,000 mark, and I think 3,000 is really kind of your pivot point here. I think that this sell-off here is really going to be short-lived because you have this uncertain macroeconomic backdrop. You've got geopolitical tensions that are set to kind of keep that market here and that bull market intact. And some of the matrix that I follow where some underinvestment has occurred on the precious metals, you got the hedge fund managers are cutting their bullish bets on gold to a 10-month low. You got silver at a 4-week low. And at the same time, China's central bank continues to buy gold. And that is where I think that things are coming in. Remember, the central bank demand, the ETF demand, those are the things that we're really watching. So if you look at the ETF flows from the previous session here, you got exchange traded funds adding 14,000 troy ounces of gold in the previous holdings. You got ETFs adding 1.6 million ounces in silver here in the previous trading session. So year to date, ETF flows, gold plus 6.2, silver rocketing right back up at 0.4%. So some things also that we're watching, copper rebounding here under a little bit of pressure in this early session, but still up on the day, up about 6 cents here at the moment at 424. The alarm just went off because Besson is about to talk, and I think that is going to be one of the key events here for the day. So many of these prices could change dramatically on these markets, and I definitely recommend if you're going to hear Donald Trump talking about tariffs and you got a big position in the markets or any kind of economic data coming out or key thing, set an alarm in your phone a couple minutes before it comes out so you're aware and you're positioned and you're ready to go. So looking at copper here rebounding after 3 days of losses due to the global trade war. China, the largest consumer of copper, has really been buying at lower levels overseas, supporting copper prices. So that big sell-off we saw, China comes in and starts to buy here, and it was after those prices collapsed. So the buyers were driven by Chinese fabricators taking advantage of low international prices relative to the domestic prices. Domestic prices in China are extremely high. So we saw volumes on the LME hit the highest level since 2016. Excuse me. You get to the CME's Fed Watch tool. That's the other thing that we're really watching here. Assumptions that the Fed will cut 100 basis points this year are unlikely due to several reasons. And I thought this was a story that was really interesting. They're saying that there's a lot of lack of clarity on what the policies Trump is trying to bring are going to do to these markets here. Remember, we want interest rate cuts being a gold bull, but we don't want them all priced in. If you price in too many and you take them away, gold prices start to come down. You start to kind of leave some gray area as far as how many we're going to get, gold prices like that and they start to head higher on that. So the Fed, though, they are focused on the hard data, which doesn't give that dovish narrative yet. So they're unlikely to aggressively cut rates. So I'm looking more like June as our first option as far as an interest rate cuts rather than May. So the Fed's internal inflation forecasts, inflation risks, and Powell's legacy, I think, are really on the line here as far as them cutting rates. The base case is really like 50 basis points, I think, for cuts here. So as long as Powell doesn't come out with any kind of hawkish stance or say that they're really going to wait and see, and they cut once and a wait and see, that's where you get gold prices dropping. Remember, we want to look far out and see what are the things that are happening now, how will they impact the market 3 months, 6 months, and 12 months out. Something we are going to do is start to look at, with these markets selling off here, some of the key commodities, and we wrote out a piece that said that commodities, we believe, are starting to get undervalued. What are some of those commodities to look at 3 months, 6 months, and 12 months out? And I really think that's where the option market presents itself as some great opportunities to position in with limited risk to the downside. So looking at the gold market here, again, 30.23 up $50. We'll see if we can get through some of these key levels. In the chart pack, I outlined about 29.85 as your first major support level on the gold market. We see that range held here. And then on the silver market, that washout that we saw over the last couple days, and especially Sunday night, that could have marked a significant bottom in these markets. So we're going to have to wait and see here if any more volatility takes hold with some of the discussions coming right now and a little bit later on today. So if you got any questions, reach out to us. Remember, futures and option trading does involve risk of loss, and it may not be suitable to all investors. Good luck, good trading.